What's going on, guys? Welcome back to the channel. In today's video, I'm going to be going over the trades that we took on Friday as well as the game plan going into tomorrow and this week. So Friday, I mean, this like last 2 weeks has been the same scenario pretty much going into each day. So when we go and look at the main trend in the market, we go look at our Friday contracts. It tells us the main trend, and most likely tomorrow we're gonna get like around the 570 puts, 580 calls. Might be the 575 or the 565 puts. And then the 575 calls. Just depends on the open tomorrow, but charts are relatively the same. Futures are gapping down at the moment. Not sure where they'll be at open, but if we do get this chart, we're going to be bearish on the 30 minutes. So if we get this gap down, possibly we reclaim and get back above the 10, the 50 SMA to keep the trend. When we look at the higher time frames again, we closed at a very key spot on Friday, 1 hour 50. We got the 2 hour 50 pretty much there, and then this 4 hour chart is at the 10 SMA with the 4 hour chart crossed. So depending on the open, if we remain bearish, then the focus will still be on the short. If this chart goes negative, then the market will be neutral, and at that point, just wait for a cross pretty much on either direction of the premium. But on Friday, market was still bearish, and this is what we did. So if we go to the 0-day charts on Friday, I ended up taking this trade right here. If we go to the puts, very simple trade. Best trade in a trending market is a 0DT cross on in the direction of the trend. So I took this cross up in here. 10 went above the 50, and we got a nice little move out of it. Nothing too crazy. We did have Powell come on the mic, I think at like 12:30. I thought it was at 12, so I was all out of this before 12 o'clock. I think I closed at like 11:55. I'm trying to see in the Discord here where exactly I closed it on the time. I closed it all at 11:53, so that was on this last push up here. Pretty much top ticked the sell, or the bottom pretty much, since these are puts. But we got about 100 points on this cross. It doesn't look like too much of a move, but I mean, we did get we got 100 points at NQ, which is plenty. I'll take 100 points on a cross any day of the week. And then we had Powell come on. So the rest of this chart really isn't relevant. We have Powell come on at like 12:30, went negative on this chart. Nothing to take here. Wouldn't have bought this 50 dip since we had Powell speaking. This chart went negative. Still, no trade to take here. Even though this did cross negative, I'm not long in this because we know the market's still trending bearish. That's not a trade you want to take. And if we go to the call side real quick, this is what we got on the calls. 572 calls. These ended up crossing right here. You could have taken this for some points. It was a little bit of a higher risk trade because we were sitting around the 30-minute 50. Then we eventually started breaking below it by the time this actually ended up crossing. So, if you wanted to take this, I wouldn't have been totally against it because, again, we've been trending so long, and one of these crosses that occurs is eventually just going to be an absolute ripper. So, if you want a low risk trade, this would have been it right here on this this 410 or this like 210 or 215 candle right here would have been your entry, and the next candle ended up ripping like 70 points at NQ because I did take this candle right here was like a 60-70 point move on NQ, and at that point you're risk free, take a trim, and then once it breaks below the 10, or not even the you could just trail the 10 if you want, but 60-70 points on a cross that's not in the direction of the trend, that's plenty of points right there. And that's pretty much what you could have taken on Friday. Fairly simple system. Day in, day out. Is a printer. You just gotta know how to trade it the right way. And really the best thing to do right here is not even take this. If you're not experienced with the system, if you did take this, it would be a lighter trade. That's what I did, lighter trade for this. But because the trend was still bearish, you're better off sitting out of this trade and just waiting for this chart to go negative, which it never did. But that would have been the better opportunity, is to wait for the negative cross on this side. But that's what we did on Friday. Fairly simple. The last 2 weeks we've been trading bearish, focuses on the short side. A lot of people trying to call bottoms, and we're just staying on the right side of the market day in, day out, because the system is just designed perfectly where when we trend hard, we catch the moves, and it's pretty simple. We're just playing 10, 50 SMA crosses. When we cross, the 50 SMA has got to be sloped up, and then same thing with negative crosses on like calls. That's a good setup in a trading market when we're bearish. 50 dip on puts. Again, we didn't. We got that on Friday, but Powell was going to be on the mic, so this is not a trade you want to take. Plus, I think the 50 sloped down, so even if Powell wasn't speaking, this 50 was sloped down. Wouldn't have taken that anyways. But fairly simple day. Got our 100 points on NQ on Friday. That was that. Called that out in the Discord. Link to the Discord down below if you guys want to learn, follow along with the trades. More importantly is learn. That's the main point of the Discord, not just to follow the trades that we call out. But going into tomorrow, like I said, we closed at a pretty key spot, so all depends on the open. Gave you guys the two scenarios. The call side is around this 50 estimate too, so futures are gapping down. But if, let's just say, we did rip hard tomorrow, the market probably does flip bear or flip bullish, because we're pretty close to the 50 on the 30-minute. And if the bears want to lose the trend and start crossing negative on all time frames, like the 1 hour, 2 hour, 4 hour, then that would pump us bullish, because this would most likely cross at that point. But if that doesn't happen and we gap down, and this put chart gets back above the 10, the 50, and this doesn't go negative, then we're still going to be bearish, and you're just going to be looking for a put cross, and you're going to be looking for a 50 dip on puts after the cross. And then also be aware of overbought levels, because there's a chance if we do gap down, decent amount tomorrow, that we hit overbought and get a reversal. So again, to get the overbought levels, you go on the 30-minute on the 0DT chart, and you find where the 50 is. And if that 50 estimate value is above 1.00, then you add 3.5, add 4.5 to get your two overbought levels. And then in that zone is where you could probably toss some longs on the table. I would recommend you trade options for that and just buy some time on them, because trading futures could be a little bit harder and more difficult, because there could be some drawdown. So best thing to do in that scenario is just buy some time with some options. And yeah, again, if that 50 SMA on the 30-minute on the 0-day chart is less than 1.00, then you multiply by 4, multiply by 5 to get the two overbought levels, and same thing. So yeah, that's the plan going tomorrow. If you guys enjoyed, drop a sub, join the course if you want to learn. I'm out. Peace.